Signing a mortgage document and not knowing the questions to ask first can cost you thousands of dollars out of your pocket. Before you sign anything, there are a handful of skills to know that can save you thousands of dollars on your mortgage as well. Not tips, not tricks, skills. Things you actually need to know how to do before you put your name on a mortgage document. I'm Murray Zelinski. I'm a licensed realtor and a licensed mortgage associate here in Stony Plain, servicing Spruce Grove in West Edmonton. This means I see the mistakes buyers make on the real estate side and the mistakes they can make on the financing side. If you would like your own private consultation on how to navigate the home buying process and avoid those potential landmines, message me directly with landmines and I'll connect further. Now today, I want to walk you through the skills that separate a buyer who feels in control of the mortgage process from a buyer who feels like the mortgage is controlling them. And this is key in the home buying process. Skill number 1, know your actual credit score and payment history before a lender pulls it. Your credit score isn't just a pass or fail number. It can directly change the interest rate you're offered. Two buyers with the same income can be offered different rates because one has a stronger credit profile. This can also change the amount of the down payment required from a minimum of 5% to as much as 25% on a mortgage. That can have a significant impact on your actual mortgage payment and a substantial difference in the cost of borrowing over a 25 or 30-year mortgage. Here's the skill part. Don't wait until you're sitting across from a lender to find out where you stand. Pull your own credit report ahead of time through a free credit monitoring service. Look for 3 key things. First, your credit score, which should ideally be 650 plus, the payment history, that there are no late payments in the last 24 to 30 months, and anything that looks wrong, an old collection, a credit card balance that's higher than it should be, or an account that isn't yours. If there's something wrong, you have time to dispute it before it impacts your application. It can also be a great time to discuss these concerns with your mortgage broker or bank, and they can help provide some guidance here too. Also, it's important to note that most of the consumer credit score apps can differ dramatically between what they show as a score and what the mortgage broker or bank will see. Seems strange, right? I get it. You would think they should be the same. And there is a difference in rating between how you rank as a consumer versus how you are graded from a borrower perspective. However, the details in the consumer report will be consistent with payment history and any collection items, which is key. Skill number 2, know the difference between a pre-qualification and a real pre-approval. A pre-qualification is a quick conversation, typically a manual assessment of your numbers, a rough estimate on your qualification level and purchase price range for a home. A full pre-approval is very different. It means a mortgage professional has actually looked at your income documents, your down payment source, your debts, reviewed your credit bureau, and will provide you with an actual purchase price maximum so you know exactly where you stand. Also, this is backed by an actual rate hold, usually for 90 to 120 days. And that rate hold really matters more so than people realize. If rates move up while you're shopping for a home, a proper pre-approval can lock in the lower rate for you. That's not a guess. That's a real protection built into the process. The skill here is asking directly, is this a pre-qualification or a full pre-approval with a rate hold? Also to note, you will be provided with a letter signed by the mortgage broker or bank with an actual pre-approval. You are now locked in and can start to look at new homes confidently. Skill number 3, budget for the costs that show up after your down payment, not just the down payment itself. A lot of first-time buyers save up exactly enough for their down payment and stop there. But there's a second bucket of money you need separate from your down payment to actually close on the home. That typically includes legal fees, a home inspection, maybe an appraisal if your lender requires one, title insurance, and adjustments for property tax that get settled between you and the seller by the lawyers at closing. None of that comes out of your mortgage. It comes out of pocket on closing day. This is also why lenders will want to see between 1% to 3% of the purchase price in your bank account over and above your actual down payment. Be sure to plan accordingly and add that buffer to your down payment savings account. Skill number 4, understand fixed and variable rates well enough to explain the difference to someone else. A fixed rate locks your interest rate for the length of your term. Your payment doesn't move, regardless of where rates go. A variable rate moves with the lender's prime rate, so your payment, or how much of your payment goes to interest versus principal, can change during the term. Neither one is automatically the right answer. What matters is whether you understand what you're actually agreeing to. If your budget has zero room for a payment increase, that's useful information. If you have room to absorb some movement in exchange for potentially lower long-term interest, that's useful information as well. The skill is being able to explain in your own words exactly what happens to your payment in each scenario. Before you sign your mortgage, not after. Understand what those numbers are. Skill number 5, understand the mortgage stress test because it confirms what you actually qualify for. Every insured and most uninsured mortgage in Canada are qualified using a stress test rate that's higher than the actual rate you'll pay. Lenders do this to confirm you could still afford payments if rates were higher than they are today. And this is a government requirement when it comes to qualification. This stress test uses an increase of 2% added to your actual quoted interest rate. This is known as the qualification rate. The rule is 5.25% or actual interest rate plus 2%, the greater of the two. As an example, if rates were low, say 3%, the QR would be 5.25%. Since 3% is the actual interest rate, add 2% equates to 5. If the actual interest rate is 4% and add 2%, your qualification rate is 6. The key here is this is an interest rate that moves up, purchase price decreases. That's why it's important to know what the variable and fixed rates are. They don't move together and have different influences as to what will change them up or down. As an example, if at the time of purchase the variable is 3.65 and your fixed rate is 4.09, you will qualify for a higher home purchase price under a variable rate. The skill here is asking your mortgage professional to walk you through both numbers, your qualifying rate and your actual contract rate. Compare it then to the variable and fixed so you know exactly what your approved amount is under those different options. Skill number 6, read the fine print on prepayment penalties, portability, and renewal terms, not just the interest rate on the cover page. The rate is the number everyone compares, but the terms around the rate are where costly surprises happen. The lowest rate is not necessarily the best mortgage overall. What happens if you need to break your mortgage early, sell before your term is up, or want to make extra payments towards your principal? Some mortgages allow generous prepayment privileges up to like 20% of the principal per year. Others charge steep penalties for breaking early, especially if the rate given was a very low promotional rate. Breaking a promo rate early in the term can cost tens of thousands of dollars. Also, some mortgages are portable, meaning you can move the same mortgage to a new home. Others are not. Skill is asking your mortgage professional 4 direct questions before you sign. What's my prepayment penalty if I break this early? What are my prepayment privileges if I want to pay it down faster? Is this mortgage portable and transferable if I move before my term ends? And does this low promo rate have large payout penalties attached if I have to pay it out early? If you get clear answers to those 4 questions, you've avoided the majority of costly surprises buyers run into down the road. Skill number 7, know who you're actually getting your mortgage advice from. A bank can only offer you the bank's own product. A mortgage associate has access to multiple lenders and can compare rates and terms across them for your specific situation. Neither approach is wrong, but you should know which one you're using and understand that going straight to one bank means you're only seeing one slice of what's actually available to you. With banks, you need to play in their sandbox. Mortgage associates, they can play in many lender sandboxes to find the best place for you to play. The skill is simply asking up front, how many lenders can you access on my behalf? And are you able to compare more than one option before I decide? That one question alone can be the difference between a good rate and the best rate available for your situation. None of these are complicated skills. They're just easy to skip when you're excited about buying a home and eager to get into the finish line. Slow down at each one. Each of these points, ask direct questions. Get the answers in writing when you can, and you'll walk into your mortgage signing knowing exactly what you agreed to and why. If you found this video helpful, remember to subscribe for more information on the home buying process. And if you're buying in Stony Plain, Spruce Grove, or West Edmonton, and you want to walk through your own numbers before you start house hunting, reach out. Message me directly, and we can create an analysis specific to you, your budget, and your goals. And the best part, it's absolutely free. Thank you for watching. I'm Murray with the Zelinski Realty Group, simplifying the real estate and mortgage process just for you. Cheers.